What can we expect from the housing market in 2023? Today, I want to share my predictions and why I believe these projections are actually going to come true. Let's get started. Hey everyone, Happy New Year! And thank you so much for spending your valuable time with me. I hope that your year is off to a healthy and happy start. I'm going to dive right into my predictions, but I do want to preface this video by saying this information is not meant to push you to buy or sell. You're likely being bombarded with clickbait headlines, a lot of scare tactics, and the more you educate yourself, the more you'll understand how to interpret those headlines or articles and how to take everything with a grain of salt. So prediction number one, interest rates. That is the hot topic of the year. And the good news is I do predict that interest rates will come down in 2023. And I think we're going to start to see some movement towards the end of the first quarter. I think we're going to start to approach that 5% range. Now, why do I believe this? Well, as we've discussed before, inflation directly impacts interest rates. When inflation is high, interest rates are increased to help cool spending and borrowing. And once inflation has come down, interest rates follow suit because eventually we're going to need to stimulate the economy again. Recent data has already shown that inflation is cooling, but the Fed looks at a 12-month span. So they look at year-over-year inflation. As we enter into 2023 and we start reporting lower numbers showing that inflation is cooling, those lower numbers are replacing higher numbers and the average is going to come down. We saw evidence of this on November 10th. October inflation numbers were released in November, and October 22 inflation was lower than October 21 inflation. So those October 22 numbers replaced October 21 numbers, and the average year-over-year inflation numbers came down. And guess what? Interest rates fell by about 5/8%. That's great evidence that inflation directly impacts interest rates. It's not just about the Fed rate hikes. So all those clickbait articles that are stating that the Fed's going to increase their rates by 100 to 200 basis points doesn't mean automatically that mortgage rates are also going to increase. It's likely to impact it, but they're not synonymous. I follow Barry Habib, who is the recipient of 3 Crystal Ball Awards for his accuracy in real estate forecasting. He too believes that inflation directly drives interest rates and that interest rates will come down towards the end of the first quarter. For folks that are waiting to hit those historically low interest rates again, you may be waiting for a very long time. Just remember that if you were to buy today, you would still have the opportunity to refinance in the future to take advantage of those interest rates. But in today's market, you're not competing with several buyers. You have a lot more leverage to lower the price point, to ask the seller to help you buy down the interest rate. Over the last 2 years, remember, it was a buying frenzy when interest rates were really low. You had to have lots of cash out of pocket to be competitive because folks were offering $50,000, $100,000 over the asking price and over the appraisal price. So right now, you don't have to have that much cash out of pocket. You don't have the same competition. There's definitely advantages to buying now versus when you're waiting for rates to drop and a lot of buyers re-enter the market. Let's move on to home values, and I'm going to combine this with inventory because they really do go hand in hand. My prediction is that home values will stay steady, that we're not going to see a huge decline. If interest rates for some reason stay high, yes, that's going to negatively impact home values, but I don't think it's going to be a significant hit. And the reason being, our inventory is still incredibly low. For folks that are trying to compare today to the housing market crash in 2008, let's talk about inventory. In 2008, there was about 10 months supply of housing inventory. A healthy market is about 6 months supply of inventory. On average today, we're sitting at about 3 months supply of inventory, so it's incredibly low. Low supply is going to help stabilize and keep home values strong. Another reason is that a lot of folks have incredible equity in their houses. right? The last 2 years, home values have increased exponentially. And even if they were in a distressed situation, let's say they lost their job, they likely could still sell their house as a traditional sale and they'd walk away with a profit. There's no prediction that there's going to be a flood of foreclosures or home sales, which of course tank home values. A lot of homeowners have also refinanced over the last 2 years, so they do have a 2% or a 3% interest rate. Now it's going to take a lot of motivation, the perfect scenario for that homeowner to decide to sell their home and enter into a new mortgage at 6.5% interest. It's going to keep inventory low and help stabilize home values. Sellers who do enter into the market likely aren't desperate, and if they aren't desperate, they'll probably be patient and wait for the right offer to come along. And if they can't hit their magic number, they may take their home off market and wait for more favorable circumstances. Fewer sellers are going to be forced to sell, which again helps protect home values. I do believe overall the inventory will be higher this year than it was in 2022, and that's simply because homes are not selling as quickly. Sellers have high expectations for the price point they think their home is worth. Some homes are overpriced, and there's a smaller pool of buyers that are willing or able to afford those monthly payments. New construction is my next prediction, and it also goes hand in hand with inventory. Right now, I think there's a lot of opportunity for buyers in new construction, but I think it'll dissipate towards the second half of the year. A lot of builders were still building at a pace to keep up with buyer demand, and when interest rates increased, buyer demand cooled. So for the first time in 2 years, there are builders that are sitting on fully completed move-in ready homes. They have to let these homes go because of their holding costs, which means there should be a lot of negotiating power for buyers. I think because most builders have scaled back on how quickly they're constructing homes, I think opportunity in new construction is going to be short-lived. I think it'll be the first 6 months or so that you really have a lot of negotiating power. I think with scaling back how quickly they're building, that's just going to add to the inventory shortage, and it'll help protect their home values as well. I hope you found this information helpful. Again, it's not to push you to buy or sell. It's really to provide value and give you some context as to what I'm seeing in our local market.